Hi, everyone. Welcome to this session as we look into the chargeable gains tax. So we'll split it into two. We'll take the first session, which has to do with typical chargeable gains tax, the qualifying assets, and also look at how the computations are done. Then we'll look at the other leg, which deals with non-wasting chattels, okay, and even with wasting chattels, okay. For companies, they will always be liable or be eligible to claim any chargeable, to transfer any chargeable gains into their corporate accounts and then pay taxes on it. So it's quite a practice which must be adhered to. Now, if the company makes any chargeable disposal of any qualifying chargeable assets, there will surely be a chargeable gain or loss which may arise, which they have to then pick it up and account for. All right. So let's take a deep dive and see what all these chargeable gains and losses and chargeable taxes, what all these chargeable gains refer to. Okay. So a chargeable disposal will occur when a part or whole of a chargeable asset is sold or gifted. Okay, but then any gift of a chargeable asset that we give to a charity is exempt from this particular scenario. Okay, so we're dealing with whether part or whole. Okay, whether part or whole. We look at the part section in the second part of this videos or this audio, this presentation. Now, qualifying and exempt assets, which items qualify, which ones do not qualify, okay? Typically, the qualifying assets are usually non-current assets, okay? Which we all understand from our financial accounting module, okay? And they usually comprise the land and buildings, any item of property, plant and equipment, and then investments. Now, for items which are normally exempt from CGTs, we are talking of vintage cars or motor vehicles, and any chattels which are worth 6,000 or less, which in terms of cost and even disposal, worth less 6,000 or less, okay? And any wasting chattels, unless these wasting chattels are used in the ordinary operations of the business and they are eligible for capital allowances like movable plant and equipment, okay? Now also gilt-edged securities and any qualifying corporate bonds are exempt from these CGT computations or calculations. Now, once we have capital items, surely there could be either capital gains or losses which could arise. Now, all capital gains are charged straight into the corporate account for taxation purposes, but capital allowances, capital losses which will arise once we sell or we dispose these assets will have to be netted off against any capital gains which arise. So typically, we know capital losses will arise once we sell the asset at a value less than its original cost. Okay, but it is required, if possible, that any gains and losses which arise within the same accounting period should be netted off. We should set them off against each other. If you set off the capital losses and gains against each other in the financial account or in the same accounting period, and we get a gain, we charge it to corporation tax. We pay tax on it. If it is a loss, we carry this loss forward and set it against future chargeable gains, okay? So, and does not go into corporation tax computations, okay? So any capital losses which we bring forward from previous years can only be set off against similar capital chargeable gains and not against any other type of income. So we take note of that, okay? Now, what is the basis for assessment? Typically, two things will come into mind, okay? So any chargeable gains figure, which we include in our corporate reports for tax purposes, should be based on the disposals made during that year, net of any losses which we've brought forward from previous period, and then the date of sale, the date of disposal. These two will help us to assess these chargeable gains or chargeable losses that may arise. Now, typically in determining these chargeable gains, we use a format where we recognize the disposal value less any incidental cost of disposal like legal charges, okay, or valuation fees. They will come under allowable expenditure. So any legal charges which we incur as a result of disposing of these assets. We subtract it from the disposal value and we get net proceeds. Then we take out or deduct any allowable expenditure. So example, like the cost that we incurred in buying the assets, the original or historical cost, any incidental costs we have incurred during the purchase of the assets, okay, or bringing the assets into its useful state. Any enhancement expenditures which we have incurred in modifying or bringing assets into more efficient use, we subtract it. Any cost of defending the owner's title, assuming it's a landed property and there are some litigation issues, okay? And if there are any valuation fees, we subtract all these as allowable expenditure. Whatever we get after we subtract this allowable expenditure from the net proceeds, we get what we term the unindexed gain or on index loss. We then subtract indexation allowance and get what we term the chargeable gain. I've highlighted the indexation allowance in red because we'll have to look at what it means. So indexation is typically looking at where we have overpriced the assets as a result of inflation. So typically you understand a property, a landed property like a house today will be different tomorrow in terms of price. Tomorrow's figure will be usually high. Why? Because it will be cost, or the more people demand for these houses, it will cause the economic price to move up, which in typical terms we know is related to inflation. So the general increase in prices of goods and services is what leads to this increase in the value of these properties. So we must subtract any extra allowance or any extra gain which we have identified as a result of inflation. Okay, there's a formula we use. Now, so indexation allowance was introduced in March 1982. And so like I said, the purpose is to remove that part of the gain that has arisen due to inflation. Okay, so so any indexation we compute either on the cost or enhancements, we'll have to calculate them separately. And then we add them together before we plug them into the format. Okay, so calculate the indexation on the cost separately, indexation on enhancement or any other allowable expenditure. And then we plug them, we add the total together and bring them as one line item. We'll look at examples to illustrate this. So typically the RD, the formula for indexation is RD minus RI or divided by RI. RD talks of the consumer price index or the retail price index for the month of disposal, D for disposal. And RI is talking of the month that we incurred expenditure, the cost. So we bought assets on 2001. That was the date. Okay, so that's the date we incurred our expenditure. We sold it in 2005. Disposal, that's the date of disposal. So RD, disposal, RI, date we incurred expenditure. Okay. Now I'll run through this quickly. Make sure all your indexation allowances or your indexation computation is limited to 3 decimal places. You normally get the RPIs in the exams, okay? And it was introduced in March 1982, so there would be no RPIs existing prior to 1982. Now, whenever we make a gain, the indexation allowance could reduce the gain downwards, okay? But indexation allowance shouldn't throw off our gain into a loss. So we make an unindexed gain, for example, of 5,000, and we calculated and got an indexation of, let's say, 6,000. It will throw off the 5,000 gain. When we subtract the 6,000 from the 5,000, it will knock it off to become negative 1,000. We will not, the system will not allow that. We can only claim up to the maximum of the unindexed gain. Again, if we had an unindexed loss, indexation should not increase our loss. Okay, we'll look at examples to illustrate this. Now, indexation was frozen as of 1st January 2018. So in any case, we would always use the indexation as of December 2017, irrespective of the date of disposal. So if we dispose of the assets in 2020, 2021, we only use up to 2017, okay? And you'll find these RPIs in the question. Now, let's take an example. Let's say we dispose of an asset, the value was 105,000. Incidental expenses we incurred during the disposal process was 5,000. And net proceeds we'll get will be 100,000. Now, let's say we the allowable expenditure is the cost, the historical cost of the asset. Okay, the cost that we incurred in buying the asset was 60,000. Subtract it. Let's assume there were no enhancements, no other allowable expenditure. So the unindexed gain is what? 40,000. Now, let's say we computed our indexation and then we got 50,000. A gain of 40,000. Indexation allowance will knock it off to become a negative 10,000. The system wouldn't allow us to claim a loss or to knock off the indexation gain to become a typical loss where we carry the loss forward. No. What we do is that we have to equate the indexation allowance to only 40,000, the maximum of the gain. So gain will be 40, indexation will be 40, and then we'll get a nil chargeable gain or chargeable loss. Okay, that's the first point we're raising. Let's take an example where we made a loss, an unindexed loss. Let's assume we made the same scenario. Okay, so we made a loss. So let's say 100,000, and then the cost to buy the asset was 110. So typically we make an unindexed loss of 10,000. When we computed our indexation on the cost, we got an indexation of 50,000, let's assume. Total will give us what? 60,000 loss. No. Indexation shouldn't increase our loss from 10,000 to 60,000. So what do? We only claim a loss of 10,000, which we carry forward to reduce our tax burden. All right, so this is the point I was raising earlier. Now, any asset we bought after 1982, March 1982, we compute it. It's easy to work out. Let's take an example. So the format will change. If we bought the asset after 1982, it's a straightforward format as we find it. But if we bought it prior to 1982, then we have to work two different parallel calculations. We'll look at that. Let's take one after the other. When we bought the asset after March 31, 1982. So a chargeable asset was acquired in February 1983. RPI was 82.797. Cost was 5,000. So we bought it at 5,000. There was enhancement expenditure of 2,000 incurred on April 1982. RPI is given as 88.64. We sold these assets for 40,500 December 2018. But then the RPI for 2017 will be used. We don't have RPIs after 2017 December. Any incidental cost to sell were 500. How do we calculate our chargeable gain? Okay, so typically what we'll do is that we'll look at our inflow, the disposal, 4,500. Incidental cost to sell was 500. So we'll get a net proceeds of 40,000. Typically easy to calculate, right? Any allowable expenditure, the cost, okay, the original cost was what? 5,000. We bought it after 82. So that was in February 1982. Any enhancement, any other allowable expenditure, valuation, talk about any other allowable. Yes, so I think there's no other incidental cost to buy when we're buying, okay? But there was an enhancement expenditure in April 84 of 2,000. So when we subtract all of this, we get an unindexed gain of 33,000. We calculate the indexation. Okay, so I've highlighted it red. We'll look at the calculation in the next slide, the next session. So we realize that a total indexation of 16,034 is what we got. And then we find a chargeable gain. We get a chargeable gain of 16,966. Okay. Now, the indexation allowance will be calculated on the cost initially, which is 5,000, and then also on the 2,000. These are the two main qualifying or allowable expenditure. Okay, so we'll do the calculation to find why we got 16,034. So the chargeable gain from these analysis is 16,966. Now, how do we get a 16,034? So that's what I said. So first we find indexation on the cost of 5,000. Okay, so you realize that we are having 278.1, subtract the 82.97, and then again over 82.97. And then what we get is 2.352. Remember, you're keeping the indexation to 3 decimal places multiplied by the 5,000, and we get 11,760. Do the same for the enhancement, okay, and then we get 2.137 times 2,000, so we get 4,274. Add them up, we get 16,034. That's the reason why we're getting, there's the 16,034, which will knock it off from the on-index gain and got 16,966. Okay. Now, any asset we owned after 31st March 1982. Now, in this case, we are going to work two different calculations. Always check when the asset was owned. Is it on before 1982 or after 1982? So, in this case, two parallel calculations will be undertaken. We first find the cost up until 31st March 1982. And then we subtract the value at 31st March 1982. And then for calculation number 1 and 2, we deduct the cost after 1982. Dates are very important. So we'll typically have to take note of the dates. Okay, let's take an example. Now, so the format is what, let's look at the format, then we come to the example. So typically all items in yellow will be the same. The values will be identical. So let's say we have a cost prior to 1982. So the disposal value, okay, the incidental cost will be the same. We get our net proceeds as we've already known. So we classify them under two columns, the cost and as at 31st March 1982. You will understand it's very easy. So we subtract any allowable expenditure, cost to buy the assets, incidental cost to buy the assets, any enhancement expenditure pre-1982 will only go under the cost because this was only pre-1982. And then we look at any value as at 1982 goes only under the column of the 1982. We subtract all this allowable expenditure. We find post-enhancement expenditure or the enhancement expenditure after 1982. So this will cover both legs, okay, both the cost and then the 1982 section. And then we get our index gain or loss. We subtract our indexation allowance, which will typically be the same regardless of when we bought the asset or regardless of the two dates. Then we get our net effect, okay, either chargeable gain or loss. Now, if both give us, if we get gains in both legs for the cost and then on 31st March 1982, if they are both gains, we take the smallest gains. Again, if both of them give us losses, we take the smallest loss, okay? It's the same principle. So take the smallest gain so that you save yourself some tax. Take the smallest loss so that the HMRC will also save themselves some money, okay? All right. So that's what I said, all yellow items. So, but if one is a gain and the other is a loss, we have to knock it off, okay? And then the net effect could be 0, okay? Now, so that's it. If one is a gain and the other is a loss, the answer will be a nil, 0, okay? Now, like I said, all yellow items will be identical. We'll take an example to illustrate this further in real time. So a chargeable asset cost $28,500. We bought it in 1976. We enhanced this in 1980 at a cost of $1,500. As at 31st March 1982, the value of this asset is $20,000. But we further enhanced or modified this asset at a cost of $15,000 in March 1984. We sold this asset in May 2018 for $200,000. And when we wanted to sell it, we incurred extra cost of $5,000. Now, compute the chargeable gain. RPIs have been given, okay, for March 1982, March 1984 when we did the enhancements, and then December 2017 when we disposed it off, okay. So we take a deep dive, all right. So look at the asset value for May, the disposal value. So we sold it for $200,000. It will be another column of the cost as well as another column of the 1982 section. Incidental cost to sell was $5,000 on both sides, so our net proceeds becomes £195,000. Great. Now let's subtract all allowable expenditures first for the cost component only. We bought it in 1976, so it will affect only the cost. This is pre-1982, so we're dealing with that only. Any enhancement pre-1982? Yes, that was 1,500. Was there any value? That was all we have, possibly. Was there any value? What was the value of the assets on 1982? That will go straight under the 1982 section, okay? So we subtract the 20,000 from there. And then any other enhancement after 1982 was 15,000. So it covers both legs because the asset is still in use, okay? And then we get an on-index gain of 150,000 for the cost and then 160,000 for the period post 1982. Okay. Now, we do an indexation gain. We'll look at it, how we got this 107,000 again, but it's so simple to look at the disposal and then the allowable expenditure and then the cost. Okay, we'll just look at this. So all will be 107,715 for indexation. We subtract it and we realize that we get gains. Okay. So under the cost pre-1982, you're giving us a gain of 42,285. But post-1982, we're getting a gain of 52,285. But the rule says that if both are gains, we take the lowest of the gains. All right. So we're going to take 42,285. That's what we will take as chargeable gain and post it to our financial account and then pay tax on this. Okay. All right. Now, indexation, how we got the 107,000. So first, two calculations. So we find the indexation based on the higher of the cost until March 1982 or on the value of March 1982. Okay. So check the cost for the two. Now, what was the cost up until March? We bought it for 28,500, right? And we enhanced it with 1,500. So the cost pre-1982 or up to 1982 was 30,000. What about the value as of 1982? It was 20,000. We choose the highest. Okay, we choose the highest. So we choose 30,000. So we do the indexation based on the 30,000. Okay, so we have the figures there, plug them in, and you get 2.501 times 30,000. So that will give us the first indexation of 75,030. The next indexation will be the other allowable cost. And when we look at the question, it was typically the enhancement of 15,000 after that period, right? The second indexation is on the post 1982. Enhancement expenditure was the only one, okay? So it was incurred in 1984. I think the cost was 15,000. Yes, so we have the figures for our indexation. We know the formula. So it's 2.179 times 15,000, like I said, which gives us 32,685. Add it to the initial figure that we computed of 75,030, and we get 107,715. So this indexation we had 107,715. So easy to compute and get this. Perfect. Now there's a rebasing election. So a revocable election may be made to the effect that any gains or losses on all future disposals of chargeable assets which were held on 1982 March 31 should be recalculated using a rebasing method with no reference whatsoever of the costs incurred. But then we will always use the 1982 value in these rebasing elections. Okay. All right. So that's it for this. And then we'll meet ourselves in the next section. Good. All right. So see you in the next section.